You can only fight the way you practice. Miyamoto Musashi and my friends 10 to 15 minutes a day, every day, being serious in the market. Practice trading to your heart's content, learning, charting what you're doing, writing it down, using a trader's journal, using your daily market worksheet, weekly market worksheet, trade worksheets. If you don't write it down, it didn't happen. By that, what we mean is document what you do so you can remember it and learn from it and use it going forward. Making sure you document what you're learning is so important. We learn so many things and then turn around and forget them. Don't force yourself in learning the same lessons, particularly hard lessons, again and again and again. The smart man, the wise woman will make sure to document what they're doing and learn from it. Use that information going forward. The most valuable thing in your collection should be your trader's journal. Now, let's jump into these charts and see what's going on. Stocks are mixed. Everything else is down. The S&P 500s really are only upper for the day, up 0.13%. As we jump into these charts, what do we see on the weekly? We see since the weekly vertical crossover, things have been going higher, but the candles are getting smaller. So that is slowing down as far as the trend goes. We see that reflected in the price percent oscillator flattening, derivative oscillator still moving up. Remember, price percent oscillator is what? It is our lagging indicator. The derivative oscillator is our leading indicator. Price percent oscillator is a percentage version of the MACD, moving average convergence divergence indicator, and the derivative oscillator is a triple smooth version of the relative strength index. So those of you who understand the MACD and RSI, you get a little bit more understanding as to what the PPO and the DO are all about. In fact, at the end of today's training video, I'm going to put in links to our two trainings on the PPO and the DO. Very important for you to understand. Our master indicator is, of course, the PPO, the price percent oscillator, in addition to using that in conjunction with the derivative oscillator. That means we have a lagging indicator and a leading indicator working together for our success. So that's what we see going on the weekly. What's the 2-day showing us? It's losing energy, heading down, red down candle forming. First day of the latest 2-day candle. Derivative oscillator also losing momentum. Price percent oscillator and derivative oscillator still positive, but devolving. We see on the half-day chart that over the last day and a half, we can see where things are moving down. Things slowed down at the end of the day and popped up a little bit for us, 0.13%. But we can see where things are slowing. Now remember, we're looking at what kind of candlesticks? Heikin-Ashi. They're not the high open, low close. They are formulated a little differently. If you look up Heikin-Ashi on the web, you will find the #1 video there is our training on it. I urge you to take it at some point. So price percent oscillator still going down, derivative oscillator going down. Lost some of that downward energy there we see at the end of the day. So pay attention if you are in this trade after that weekly vertical crossover back on the week ending November the 5th. Just watch in particular that weekly and in most specifically that 2-day after you see it losing that energy and moving through the 2-day trend line, which wasn't a steep trend line to begin with. Let's look at the NASDAQ 100. Same thing, candles getting smaller but moving up higher. Price percent oscillator consequently flat, just heading up maybe a little bit. Derivative oscillator still going up. Go to the 2-day. Price percent oscillator positive, heading down. Derivative oscillator losing upward momentum. We can see price sitting right there on that 2-day trend line above the weekly. It was down for the day 0.46%. And we look at the half day, crossed over, going down in the morning and down a little more in the afternoon, pushing through that 2-day trend line. So again, stocks are weakening. We'll see how they continue to move. Pay close attention to how those 2-day candles end up. It may give you, if you're still in a trade, a lot more knowledge as to what you want to do, closing, taking your profit, or hanging around. Let's move on to 20-year bonds, down almost, well, not quite our biggest downer for the day. Bitcoin is that, but down nonetheless 1.45%. We've seen a lamination of the price percent oscillator. It actually delaminated, I guess we could see that, heading up at the end of the week with a pop-up on Thursday and or Friday. I know it went up Friday a lot. I can't remember if it did that on Thursday too. We can see when we get to the half-day chart. But we can see where things are now crossing over. Red down candle forming. Little wick on the top, long wick on the bottom. And again, bonds just not figured themselves out yet. Derivative oscillator still positive on that 2-day chart. Weekly chart rather. Look at this 2-day chart. Red down candle, price percent oscillator, and derivative oscillator trying to cross over going down. This candle will finish drawing on Wednesday. We'll see how it finally works out, but we'll just watch and see. Maybe this is going to give us a chance to short bonds. That would be TBF, right, my friends? Check this out. Tango, Bravo, Foxtrot. What is that? That is the ProShares Single Short Fund, meaning when bonds go down, check it out on the 2-day chart. It goes up. That's what a short fund is all about. It's an inverse fund, something for you guys to practice if you're interested in learning how those funds work. Now, they have typically larger fees. They take a bigger bite out of your would-be profits, but they give you the ability to actually make money when the market's crashing. So that's something for you to at least look at, pay attention to, practice trade. You're only going to learn by doing. I think it was Einstein who said, all knowledge comes from experience. Don't you love that? So that's what we see going on with bonds at this point. And again, 2 days of strong down movement on that half-day chart, price percent oscillator and derivative oscillator heading down, derivative oscillator going negative at the end of the day. So we'll continue to watch bonds, see what happened. Let's go to gold. Gold down 0.87%. We'll start with the weekly. After several weeks of gold ticking up quite strongly, look at this gold chart. I told y'all I closed my gold position week before last during that nice big bumping up green candle where it reached its most recent high. And then gold now pushing through, penetrating not only the 2-day trend line, but it's blown through now the weekly trend line. Price percent oscillator still positive, derivative oscillator still positive, but heading down, losing momentum. Check out the 2-day, getting very close to crossing over, going down. We'll see what happens at the end of the day on Wednesday, but a big red down candle forming, that price percent oscillator spiking down, derivative oscillator just hanging on to green. Look at the half day. We can see several days, 3 days of stronger down movement in gold, sort of progressing that way. Price percent oscillator, derivative oscillator, both in the red, heading down. Now, lastly, we go to Bitcoin down again, friends, 1.72%. What do we see happening? Maybe a weekly vertical crossover coming up. Maybe not this week, maybe next week. But again, we will keep an eye on things as we see things devolving. Big red down candle, no wick on top, a red spinning top last week, but a red down candle this week. What do we see on the 2-day? We see 4 days of strong down movement. I'm sorry, not 4 days. These are 2-day candles. That would be 7 days of strong down movement. This candle's not finished forming yet, but just moving right down that 2-day trend line. Price percent oscillator gaining downward momentum. Derivative oscillator gaining downward momentum. Look at the half day. And again, we can see where Bitcoin is slid. We know yesterday it was sliding sideways. Today, just renewed that down movement. Price percent oscillator heading down. Derivative oscillator continuing to lose downward momentum. You might want to understand why that's happening. And it has to do with a slowdown in the percentage of down movement. When you take the study today that I'll put at the end of today's video, I'm going to put both the PPO training, the price percent oscillator, and the derivative oscillator training. You'll understand a little more between that triple smooth version of the relative strength index, which is the derivative oscillator, and the percentage version of the MACD, which is what the price percent oscillator is. Help you understand these things a little more so you can understand more what it is you're seeing and why you make the decisions you make when you see it. That is where we are, folks, as we end the day in America. Hope you guys are getting ready for a wonderful Thanksgiving holiday on Thursday. We'll continue to work our way toward that date. If you have any questions, we love to hear from you. CW at chartingwealth.com. Patreon members, thank you for all your support. Book buyers, thank you for all your support. God bless my friends. All the best from the whole team at Charting Wealth World Headquarters.